We are going to look into incomplete records. Now, in incomplete records, there's nothing much to teach actually, because to do this chapter, all you have to know is all your understanding of this IGCSE accounting syllabus. If you know how to work with your ratios, if you know how to work with your equations, and you understand debits and credits and stuff like that, then you should be able to do this chapter. So to say that I'm going to teach something totally new, no, there's nothing new to learn in this chapter. It's just using whatever knowledge we have prior to this and applying it for this particular chapter. Now, when do we have this incomplete record is mostly the small traders. They normally don't have the accounting background or bookkeeping background. So they don't keep this what do you call this informations in a very proper manner in debits or credits and stuff like that. What they do is they keep all their things in an invoice, in a file, and then some bank statements and stuff. So informations will be everywhere, but at the end of the year, they still have to submit their profit and loss account to the taxation department. They still have to do their income statement and SOFP. So using these informations that's from everywhere, from your journals, from your balance sheet, or from ratios, we have to figure out what is the company's profit, what is the company's capital and such. Right now, for this, as I said, there's nothing much for us to learn. What we will do is we will attend some of the past year questions and straight away work on how to attempt them. Right now, again, this chapter, they don't ask you in your paper to, in a meaning that they don't ask you a whole question like manufacturing or even your limited companies or clubs and society questions. It's a whole question. Right now, they don't ask you some anything like that, because it is quite complicated in a sense that they ask this more on a higher level. So what you have to do here is most of the questions here are asked in MCQ. So the next 10 questions we're going to do is all MCQ questions from the past years, and we see how to attempt this. Okay, there's a few things that you have to know on this chapter. Basically, all you have to know is the equation. What is the basic equation that we have learned so far? So the equation we have learned is asset equals to liability plus owner's
Honors
equity. Owner's equity can also be written as capital plus profit
profit
minus
minus drawing.
drawings. Yes, minus drawings. Right, so this is the equation that you have to know. We have gone through this equation quite some time, so I don't want to go through again. And the next thing you need to know is your ratios. So what are the ratios you have learned so far? You have learned the profitability ratio, which is your gross profit margin, net profit margin, markup, and also your ROCE. Under liquidity, we have learned two ratios, which is your quick ratio and your current ratio. And efficiency, we have learned inventory turnovers in days, in times, yeah, how many times we actually replenish our stock. And then we talk about trade payable turnover, and also we also talked about trade receivable turnover. So these
Uh-huh.
are the ratios. These two are in days. So these are the ratios we learned. Apart from that, you need to know your prepayments and your accruals. Know how to work with your prepayments and your accruals. You have to work on that. And most importantly, you also need to work on, I forgot this. Yeah, you need to work on your controls account. All right. There's a few controls account we have learned. Couple actually. We have learned the trade receivable control account, or we call that as sales ledger control account, right? Or also known as sales ledger control account. And we also will have to know how to do trade payable control account, or also known as purchase ledger control account. Now, how do we do trade receivable control account? Now, trade receivable control account is basically an asset account. What we are doing here, we are going to combine all the receivables that you have. You have receivable A, receivable B, receivable C. There's many people owing you money. You're going to put it all together into one account and see how much is your total receivable. All right. Now, another reason why we do this control account is to check for errors, right? We want to see whether when we are transferring from our sales journal or sales written journal, are we making any errors, or is there any kind of fraud taking place can also be detected. So when we did this chapter in detail, we have looked into it. So for trade receivable account, since this is an asset, it increases on this side, decreases on this side, balance brought down is on this side, balance carried down is on this side. Now for trade payable, it's a liability, so it increases on this side and decreases on the other side. All right, and balance brought down starts on your credit side and debit is your credit down, right? So this is what you have to know for this chapter. If you know this, most of the time you should be able to attempt this question and get it right. Any question? Can, yeah? So straight away let's go to the question that we want to attempt. The first question we look here. Okay, as I say, we are going to look into multiple choice questions. Yeah, these are taken from past year papers. Right, now this is your first question. The first question, I'll do it with you. The second and the following questions, I would like you to attempt on your own. Okay, now the first question. A trader provided the following information. What is the information given? Net asset for the year, drawings in cash, drawings in good, and net asset at the end of the year. Now, what is the profit for the year? Now, we can use our, what do you call that,
Counting equation.
accounting equation to do. Now, we know that our asset must equals to liability and owner's equity. Now, beginning of the year, in the beginning of the year, our assets were 8,000, liability was 0, and our capital must be something which we don't know. So since our asset is 8,000, there's no liability, our capital must be 8,000. So we already know our beginning capital. Now with this, we can do the ending capital. How do we do this? Net asset at the end of the year is given. So beginning capital plus profit for the year minus drawings, you should have ending capital, right? So we know that our net asset must equals to our capital. So beginning capital was 8,000. Profit for the year we don't know. How much is our drawings? Our drawings was 2,100 plus, now drawings of good, they give you cost price and selling price, right? So which one is the answer? Which one we should take? Should we take 50 or 90? Drawings of good, we will always take it at the cross price, right? Remember this. Any drawing good of goods, we will, even if we record this, we record it at debit drawing and we will credit purchase, right? In purchase account, we will always put in information on cost value, not on the selling price value. So that is the reason when we take our drawings account, we must take on the cost portion. So which is 50. Right. So what is the ending capital? Your ending capital has to be 8,200. Okay. So how do we find our X now? So X will be 8,200 must equals to 8,000 plus X minus 2150. So 8,200 must be 8,000 minus 2150, which is
5850.
5850. So what's your X? 2350.
2350.
There you go. So that's your X, right? So this is pretty easy. Now let's try the next question. Right. Now Zara provided the following information for the year ended amount owing by credit customer in the beginning and the ending, checks paid, discount allowed, and goods written by credit customer, and they wanted to know credit sales. So this is more about credit customer. This is accounts receivable, right? So as long as we can do a controls account, we should be able to figure out their credit sales. Now let's see how to do the controls account. Right now, um, balance, because this is a trade receivable control account, it increases on the debit side, decreases on the credit side, and since it's an asset account, balance brought down should be on your debit side. So your balance brought down is 2250. Now balance carried down will be 1500 on the opposite side. Now checks paid by credit customer, now the trade receivable is decreasing, so it should be here. Bank is 14220. Then we have discount allowed. Discount allowed is also on the credit side because it decreases the trade receivable amount, which is 80. And we have goods written by customer, which is sales written. So our sales written must be 215.
150.
So why is it on your credit side? Because sales written will decrease your trade receivable. Now, sales should be on your debit side. Why? Sales would increase the amount of trade receivable. So we don't know what's our sales, so we basically have to add this up and minus from the other figure over here to get our sales. So how much is this? 2150 plus 80 plus 14220 plus 1500. That should be 17950, right? And on the other side, minus 2250, it should give you 15700. There you go. So your sales figure, credit sales is 15,700. For this question, right, on 1st January, Omar had capital of 23,000. During the year ended 31st December, Omar introduced 25,000 extra capital and 1500 was paid by the business for building Omar's work. So Omar's house, they were building Omar's house. So this is basically a drawing because it's not for the business. And they want to know what's Omar's capital at the end of the year. Now let's look at this. So how do we do this? We have beginning capital plus profit. No, since we have additional capital, we're going to work on that first. Beginning capital plus additional capital minus plus profit minus drawings, you should get ending capital. Okay, now so what was the beginning capital? Beginning capital was 23,000. Now brought in additional capital of 2,500, and they didn't say anything about profit, assuming there's no profit. And they had a drawing of 1,500. So what's the ending capital now? So basically 23,000 plus 2,500 minus 1,500. So the answer is 24,000. Well done. Now this question says they have got information on bank overdraft, inventory, trade payable, and trade receivable. How much extra capital would Bob have to invest to make the value of working capital 24,000? Now, what is working capital? Now, working capital is current asset minus current liability. So, working capital for this business would be current asset. What are their current asset? Let's say this is current liability, inventory is current asset, trade payables is a current liability, and trade receivable is a current asset. So let's group all our current assets together. Inventory 7,000 plus trade receivable 18,000. minus current liabilities will be bank overdraft 3,000 plus trade payable of 12,000, right? So this will be 25,000 minus 15,000, right? So that gives your working capital 10,000. Now your working capital is 10,000, but the question is asking how much he needs to add in so that his WC becomes 24,000. So he needs to add in another 14,000. So the answer is 14,000. Okay. Now, Emily is a trader. She provided the following information: non-current asset, current asset, current liabilities. Her capital was 20,000. She did not make any drawings, so drawings is 0. They want to know profit. So basically using the equation. Right. What is the equation we have? We have the equation asset equals to liability plus owner's equity, right? So we go back and try to use this. Your asset can be non-current asset plus current asset, whereas your liability here is current liability plus capital plus profit minus drawing. So this entire bit here is your owner's equity. Right, so the non-current asset would be 25,000 plus 15,000 on current asset. Current liability would be 12,000 and capital would be 20,000. Profit we don't know, minus drawings is 0. So here we have 32,000 plus profit, and this one is 40,000, 25, 30, yeah, 40,000. So profit should be 8,000. Let's have a look. Abdullah started a business by transferring his own vehicle to the business at a valuation of 9,000 and sum of cash. So we have a business that starts with 9,000 and some sum of cash, which we don't know. Profit was 2,000. At the end of the first year, the balance of capital was 51,000. So how much he had in the beginning? So let's start with this. So beginning capital was 9,000 plus X, we don't know. And then we have profit of 2,000, right? There was no mention of drawing, so there's no drawing. Ending capital should be 51,000, right? So that's all he had. So how do we figure out this one? So 51,000 equals to 9,000 plus X plus 2,000. So 11,000 plus X is your 51,000. Ending capital X should be 40,000. Now let's try the next one. This question is quite easy, but it has to work backwards. Give it a try. So we know profit is calculated. We know we calculate beginning capital plus profit minus drawings should give you ending capital. Now we want to find profit. So what we have to do now, let's say our ending capital is here. Ending capital must equals to beginning capital plus profit minus drawings, correct? Now if you want to leave our profit alone, we leave our profit alone, right? So what we have to do is ending capital minus beginning capital plus drawings. You will get your profit, correct? So ending capital is closing capital. Yes, 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 yes. Minus plus drawing. So this is yes, this is yes. Minus beginning capital. Minus beginning capital. or this is opening capital. These two is not an answer. So the answer should be A. Now let's look at this question. Again, they're asking for credit sales, right? So immediately, you know, if it's asking for credit sale, we will try to do the controls account. So because credit sales, so this is going to be um, trade receivable controls account or sold sales ledger control account. Right. First trade receivable owed was 4250. So now let's look at this. Balance brought down 4250 and 3940 is your balance carried down. Now if you notice, you know this side decreases, this increases because receivable is an asset account. Right. During the year, 48760 was received from trade receivable. So trade receivable decreases. So bank or cash, you can write either way. 46750. Returned goods. So sales return would be 1130.
30.
So what's your sales? Basically, you just have to add them up and find the missing figure. So here will be 1130 plus 46750 plus 3940.
47570.
So this is 51820. So here should be 51820 minus 4250. It should give you 47570. Now, Khalid started a business on 1st April 2018 and with a capital of, hold on, 90,000. 10 more minutes. Non-current asset, current asset drawings for the year. Oh, that's easy. Let's start with beginning capital. Beginning capital 90,000. And they've told you what's your, okay, hold on. What is the profit for the year? So we know beginning, and then we have our profit and we have our drawings. Now our drawings should be 19,000 and we don't know our profit and we don't know what is our ending capital. Now how do we know our ending capital? Our ending capital should be equals to assets, right? Because asset equals to liability plus owner's equity, right? Now our assets here is 70 non-current assets and current asset, here current liability, and we don't know our owner's equity. So non-current asset was how much? Hold on. Non-current asset was 75,000 plus current asset of 32,000, current liability 24,000, and we don't know our owner's equity. So 75, 70, 107,000 must equals to 24,000 plus OE. So owner's equity must be 107,000 minus 24,000. So which is 83,000, right? So here we know it must be 83,000. So what's our profit here? Work backwards. So we know that 83,000 must equals to 90,000 plus x minus 19,000. So 71,000 plus x must be 83,000. So x must be 12,000. Got it? So this is your profit. Okay, we are going to attempt the last question for this session. Now, what we have here? Oh, we have a list of assets and liabilities, and they want you to figure out capital. That's easy. As we have done previously, we just have to figure out our equation. Once we figure out, plug in all the information and you should be able to get your capital. Now, before we start doing this question, it's always advisable for you to uh, l- identify where each of these item goes. Right now, let's look at non-current asset goes under asset column. Inventory is our current asset. This is our non-current asset, right? And insurance prepaid is a current asset. Trade payables a current liability. Petty cash is current asset. Now, rent receivable is an income account, right? Now, and it's prepaid. So, rent receivable prepaid is income prepaid, which means it's a current liability. Now, we have bank overdraft. Bank overdraft is a current liability as well, and trade receivable would be a current asset. Yeah, so we've labeled them. Now it's a matter of actually putting it where it belongs. So again, let's rewrite again our equation. Now in this case, I'm just going to add in as capital, right? So our non-current asset plus current asset should be current liability, because we don't have any non-current liability, so I'm not adding anything over there. Now, what's our non-current asset? Non-current asset is 103 650 plus current asset, which is inventory 4960, plus insurance prepaid 130, plus petty cash, which is 100, plus rent, no, no, trade receivable, which is 5120. Yeah, now which equals to your current liability, which is your trade payables 5380, and plus bank overdraft 2900. Now, and also don't forget our receivable prepaid of 240. Okay, so we've got all this information in, we can figure out our capital. Now, how much is this? Okay, so the total of all our assets should be 113,960, whereas our liabilities here should be 8520 plus capital. Now our capital should be 113,960, take away 8520, which is equals to 105,440. There you go. We figure out our capital. Our capital is 105,440. That's it. We are done with this chapter. For this session, I mean. Now you can also go back and review other videos to understand why rent receivable is a current liability, or why a certain expenses is considered a current asset, certain expenses is considered a current liability. The same case with income prepaid and income accrued. Why do we label them as current assets or current liability? That will be covered in a different video. Now watch that to understand further on this rent receivable. Okay, right, this is done, and please go and try doing this again and again on your own. Yeah, so that's it for this session. Just to recap before we end the day is, we've learned how to do these incomplete records using the equations. Asset equals to liability plus equity. We have not come across any ratio analysis. Perhaps if there's other questions, we will attempt them then. And the other most frequently used in this set of questions was the controls account. Yeah. So as long as you know your controls account well, you know your what do you call the equations, this chapter shouldn't be much of a problem. Right now, thank you for watching, and if you like what you have seen so far and you would like to know more, learn more accounting IGCSE syllabus, please subscribe to this channel, and you should be able to receive more videos. Right, thank you.